Hello, everybody. My name is Eric Bird. I'm your host here at StopStrugglingNow.com. And tonight, we're going to talk about the thank you very much because we surpassed 400 subscribers. I want to say thank you, everyone, for listening, commenting, watching, sharing. And now we're going to get into how we can make some more money, how you can earn passive money every 3 months. Some of you have taken advantage of money-making opportunities. Some of you have taken advantage of ways to save money. Some of you have boosted your credit score. We're going to talk about a few things. So, you know the usual. Let's get to it. So, what we're going to talk about first is something that's pretty staggering. The Social Security Administration came out with the 2017 numbers, and I was shocked. This that I have highlight is quite scary. What this number represents is, this is cumulative. So it starts here and it just keeps rising. But basically, this is $30,000. This is the working population in the United States. 48% of the people in the United States who have a job make $30,000 or less. I did something on this a few months ago, and now the numbers are even worse because next on the list is something. It's 54% of the population makes less than $35,000, and now look at this number here. Almost 60% of the population makes $40,000 or less. Just to put that in perspective, if you were trying to get an apartment and the apartment costs $1,000 per month. Most apartments, when they do your credit, they want you to earn 3 times what you make. That would be $3,000 a month times 12 is $36,000. That means almost 60% of the population would not qualify because once you put in, if you have a loan, credit cards, a car payment, school loans, any type of other loans or any type of payment goes against your earnings. So if you made $1,000 and you had a car note of $200 and you had a credit card payment of $50 and a student loan payment of $50, you're at $1,400. You're not going to qualify to live at this apartment complex. You would have to make more than $40,000. So this is pretty scary, and it is close to Halloween, so scary should get you moving. This should get you moving on either earning more money at your present job or finding a way to make more money. And seeing how this is StopStrugglingNow.com, you might want to review some of these videos because this is going to get much worse when the 2018 numbers come out in 2019 due to government regulations, tax cuts, and spending bills and inflation rising. Wages are not going to rise 3%. The cost of living is not going to go up 3%. Inflation's 3%. It's going to be higher this year because we're printing more money to pay for things. So this is a preview right here, and all of this is to be said is to get you motivated so you'll start saying, wait a minute, this job that I'm working at, this isn't good enough. A lot of jobs do not pay $3,000 per month. All right, let's just get that on the table straight out the box. So this is something that's pretty serious. Now, I've come up with the cell phone bill that you can pay one time, $300, MCS USA. You can cut your cell phone bill. And that's what I'm talking about. You can use some of that money that you're paying towards your cell phone bill to make your future better. And how are we going to do that? Speaking of MCS, I got something from them. And how are we going to do that? We're going to talk about stocks. And not just any old stocks. Everybody looks at stocks as I invest in the stocks. The NEO project, when it was an IPO, which most of you can't be greedy. You should have invested day one, day two. When it rose to 2 times your money, you should have taken the profit, if not all of it, some of it, so you get back to where you're ahead. A lot of people took a lot of profit that day. So now it's settling back down to almost where it was supposed to start at, and now it's going to have to be a growth stock if you want to hold on to it. But the fact is, these stocks that I'm presenting today, mind you, this is for entertainment purposes only. This is just something that you have to consider, because the stocks come out with dividends. And some people may not know what dividends are, but we'll start with the first company, which is Ford Motor Company. Then everybody knows who they are. They're worldwide, international. They're not just in the United States. They have other components of their company, like some of this autonomous driving. Ford is on top of that. They're into that field, not well publicized, but this is good to know. Their stock has been getting hammered for years. All right, and they trade on the F, as you can see, and it's a Ford Motor Company. And as of right now, the stock market has been going down, so it's $8.98 as of today, as you can see, at 4:01 Eastern. So today's Friday, October 26. A dividend is when a company actually gives you some money because you hold their stock or you purchase their stock. So just to be, rudimentary about this, you invest, let's say, $9 in their stock, and every 3 months they pay on a quarter 15 cents. So at the end of the year, annualized payout means 60 cents. So there's 4 quarters in a year, so that's 4 times 15 is 60 cents. So you purchase the stock at $9, your rate of return is 6.68%. There's no banks that give you 6.68% on your money. There is a bank that I've told people about, DCU, that'll give you 5.12% on the first $1,000 that you put in a savings account there. I'll have the links below so you can check it out. When you're buying stock these days, you want to go to Robinhood. Download the app, Robinhood. They do not charge you to buy stock. They do not charge you to sell stock. So that's why you want the Robinhood app, and I'm going to have the link down below. But the reason why I bring up Ford Motor Company is because of the original stat where I showed you the wage statistics. Not that many people have a lot of money left over, but somebody might have $100 left over a month because you just now nixed your cell phone bill if you would have joined us in the MCS telecom program. Now you could buy 10 shares every month, and just think about it. It's not that much, but at the end, it's a cumulative thing. At the end of the year, you have $1,200. You're going to have, or 1,200 shares, let's say, if the stock stayed at this price, and you would then, for not 1,200 shares, $1,200 would get you 120 shares, and then you can do 120 shares times 60 cents. All right, so that's how much money you would be getting every year from your initial investment and beyond. So you can imagine that you can reinvest your dividends back into buying the shares of stock, which means now your 6.68% could rise. And if the stock price goes up, then that means you have a win-win, because not only will you be getting dividends every 3 months, and annually your stock price could go up. So if you decide to sell, and it's a win-win, but I would not advise selling because Ford's going to be around for a long time. They're an international company. So that's the idea. You use other money that you're making, whether it's you work at a job and you do something else to make additional money. Why not put $100 towards your future every month or every 2 weeks? Whichever you prefer. But I'm giving you some stocks that anybody can afford to buy, and you can get into the game. Why do you think the stock market is always on the lips of the rich and famous? This is where they play. Ordinary citizens normally don't play because they don't know that they can just simply invest $50, $100, $200, just here and there, and then join in the party. And over time, 1 year, 2 years, 3 years, the next thing you know, you're sitting there going, wow, I have 500 shares of this stock, and now I'm getting 500 times 15 cents. And sometimes companies raise their dividends, and sometimes they drop them as well. So GE, for instance, their dividends used to be around 25 cents. They're going to be next on this list. So anyhow, again, I hold Ford, I hold GM, and all I'm saying is these are low price stocks and anybody can get into them without being afraid. So let's move on to GE. GE is now, because of the stock market going down, is $11.30 today. All right, and they're giving out 48 cents a year right now. Again, they used to pay 25 cents a quarter. They used to pay $1 per year on their shares, but they've been going through hard times. And notice that's called conglomerate. They're a multi-international company, so they're going to be around. They've been paying dividends for, I don't know the actual number, but it's 30, 40, 50 years. It's been a while. But they have reduced it because they've hit hard times, so to speak. Their stock has come down in price. It's at a reasonable $11.30. They're getting 4% on your money. And again, you're getting 48 cents annualized a year. Again, I'll just keep it in simple terms. 10 shares, is $113 if you would have bought them today. And then you're getting 10 times that, $4.80 a year on your money if you just did the 10 shares. But if you progressively bought another 10 shares next month, another 10 shares the next month, you can see where you would again have 120 shares, and then you just times that by 50 cents, let's say. It's half, so that'd be 60 cents, so $60. So it'll be a little under, it'll be like $55 or $54 per year that you're going to get. But this is how the big boys play. Now imagine if you had thousands of shares, which may take you 3 years, 2 years to accumulate, but now you have thousands of shares. If you had 10,000 shares times 48 cents and they're sending you $5,000 a year, now you see why trust fund babies never run out of money, because this is what their family does. They do trust funds and they invest in these type of companies, so that way their family will not run out of money, and that's how they can sit on their ass and not have to do anything and just throw money away, because every 3 months they're getting checks. And the checks aren't these little bit of money, because if you had $1 million into this, just think about it. Every 3 months, you're getting almost, you're getting, 12, 15K, something like that. I mean, it just keeps adding up. So that's why you invest, and then you reinvest the dividends, and it stacks the money for you without you having to do anything. And then you look up 5 years later, 6 years later, and you're going, wow, that little bit of investment, look at this. And now you start getting a little bit happier, because you're like, now I wish I would have put in $1,000 from the get-go. I wish I would have put in $2,500 from the get-go, But if you can't afford it, then don't do it. If you can only have $50, if you have $20, just get started. Even if you have $20 a paycheck left over and you're sitting there saying, well, what can I do to help out my future? This is how you do it. Next up, Neighbors, oil, gas, drilling, and exploration. Who knows what's going to happen in the future? But look, these guys are at $5.22. And again, if you bought at this price today, then your yield over the course of a year would be 4.6%. And you're getting 24 cents per share. Again, 10 shares, $52, $2.40 per year. And you start breaking this out to 10 times that number, and you're starting to go, okay, if I had 500 shares, then I get $24. I mean, you start adding things up, and it starts, over the course of years, if you're lucky enough to invest and end up in having thousands of shares, which could happen over a 10-year time easily, you're going to be getting checks every 3 months if you choose to do that instead of reinvest it. All right, so Neighbors, another one, low cost, easy entry. Go to Robinhood, use my link below. There's a bonus that I don't like to talk about because I never even pay attention. Half the time I'm doing this, guys, I'm not trying to really earn anything from it, but they apparently give out free shares of stock when you sign up to you. I don't know if I receive anything, but either way, that's where you want to go first, because you can upload your money to Robinhood app, and since there's no fees like a normal brokerage firm, whatever your money, it goes 100% in there. Although I've had fees before, and they're like 21 cents or something. I don't know what they were, but I didn't care about the 21 cents. I know my Capital One is $6.95 every time I did a trade, so it doesn't make much sense. If I bought 10 shares here for $52.20 on Robinhood, that $52.20 is going to cost me $60 using a regular brokerage firm, because they charge me $6.95. So I'm going to have to kick them $60 versus the $52.50, and that could have been another share of stock if I was going to put in $60. And so that's why I recommend using Robinhood right now. All right, and so here's the next guys up. Everybody's heard of General Mills. This is rising. All these are rising in price now. The first three were just so ordinary citizens can get in. These are also ordinary citizens can get in, because 10 shares, that's the standard I'm trying to set right now, is $435, $436. Well, these guys, they pay almost $2 every year. Yield is 4.5%. Again, 10 shares, next thing you know, you spent 400 and let's call it 440 if you would have bought today, and then you're lucky enough to spend 440 next month, or 440 bucks 3 months from now. Each share you have, you're gaining $2 almost, $1.96, and they've been going up. This is one of the companies that has been increasing their dividends. So I don't know what $1.96 divided by 4 is, but it's been going up. It used to be maybe $1.50 a year, then $1.60, then $1.80. Now it's $1.96. 14 years it's been growing. Since 2004, their dividends have increased. So you can see what happens. It's a number of years in which annualized payouts have been consecutively increasing. So, and everybody knows GE, processed and packaged goods. They do the cereals. They do chips, and they have a whole conglomerate as well. So this is a very nice company. They're stable. They're international. They're not going away. They have the staples. Everybody knows, even if you don't have milk in the house, you can always open up a box of cereal. So even when times are hard, people will have cereal or chips or some little snack items. So this is another good company to own. They've been around forever, and they're not going to go away even in a crisis scenario. They do cost a little bit more, but again, this is what you're getting. And at the end of the day, if you can invest with them for 5 years, every 3 months, and get like 10 shares, before you know it, you're going to have I haven't done the math, but you could have 500-600 shares at the end of 5 or 6 years, and the next thing you know, you're having $1,000, $250, $300 coming in every 3 months, if you choose not to reinvest your money and just say cash me out. So that's why you hear a lot of people are retired and they say, hey, I have money coming in. This is why. When they were in their 20s, 30s, 40s, even 50s, and people are 70 years old, 75 years old, and they're getting checks, and people that don't understand how they're getting checks. This is one of the ways. They're not everybody's a trust fund baby. People invested in these dividend stocks, like Warren Buffett. I'm sure you may have heard of him. That's what his company does, Berkshire Hathaway. He invests in companies that give dividends. So therefore, he can pay out to his fund the high returns or very good returns. So that's why he's been very successful. So you got to be very successful. That's why a lot of people do not invest in the stock market, and they're missing out on just the dividends themselves. So let's move on to something else. These are going to start going up a little bit. These next three, They're going to be cigarettes and things of this nature, but you'll see why I'm going to be talking about it. This here is a preferred stock fund, and look at this number, 5.29%, and they're also giving $1.91 annualized return, but they haven't had an increase, unlike General Mills. So if the stock almost cost the same, 43.52 versus these guys, it's almost due to historical records, it's worth to pay a little bit more in stock when you know they've been increasing theirs and you know they're going to be around. The PFF guys, they're relatively new. It's an iShares. It's $36, but you're getting 5.29% on your money if you would have invested today, and $1.91 per share. So I had to show you guys they have to do with money and banks, real estate, and they stick with the Standard & Poor almost index. So they're going to hover around 5-6% a year, and it's amazing. They're giving out almost $2 a year in the stocks, and it's only $36. So again, 10 would be 36, 5, 160. You can buy one share of stock if you want on Robinhood. You can buy 2 shares of stock. You cannot buy partials. This isn't cryptocurrency. But when they reinvest your dividends, then they buy partials, so to speak. All right, so next up, PM, Philip Morris, tobacco products, and other, which will probably be marijuana products. But what's amazing about these stocks, these last two that I'm going to give you, is not only is the rate of return 5%, but this $4.56 is kind of incredible. So now you see why people are, these stocks, they lobby, they do everything with the Congress and the government, and they make big profits. And this is why they're able to give their shareholder, whoever owns a stock, gets $4.50 per share. So again, 10 shares doesn't add up, seem that much at the beginning at $45.60 for owning 10 shares. But you start doing 1,000 shares, and now it ends up being $4,560, and then they send you $1,000 every, well, $1,400 every no, it's not even $1,200, but it's $1,100 every 3 months. And heaven forbid if you had 10,000 shares, and now you're sitting there going, okay, I'm loving life. But this is what I'm talking about. This is why some people are left out. Those wage earners who are down here struggling to survive, 60% of the population make under 40 grand. Who's going to sit there and put their money into the stock market? You're struggling to pay your electric bill, your light bills, your car notes, your school loans. So you're not even thinking about this. And that's why I went the other way. And like I said again, I've said it 3 times, the MCS cell phone company, that's why I advise everybody to hit the link down below, order your SIM card. It's $300 one time, and you will not have a cell phone bill for 9 years. It's in beta testing. When it comes out of beta testing, of course the price is going to increase. But right now, you can use some of that money that you're paying for a cell phone bill that's going out the window and invest in stock and do it for the next 5, 6, 7 years, and you could be getting dividends. And look at here, Philip Morris has had 10 years of growth, and they're going to continue to have growth because they're going to be jumping into that cannabis situation, I'm pretty sure. And once states keep making it legal or allowing it in their state, it's just going to continue to grow. Don't believe these guys won't be buying out some of these growers and taking over, because they have the funds to do it. So if you can afford to buy, even if it's 1 share here or there, this grows pretty fast. But then again, you can always go down to here where it's only $9, and for the same 10 shares, that's $6, right? You would have $6 in return per year. So I'm arguing, why go with Philip Morris, even though they have that nice big payout? But in reality, if you use the same amount of money, it's almost the same price. 89, that would have been 10 shares is $89. Philip Morris, $89. except you get $4.56 there. You're going to get six dollars here for the same 10 shares. So see, it would make more sense just to buy 10 shares here. That's how you have to look at this. But the thing is, get in and start buying, and get in and do your thing, and then you just let it sit. You don't have to touch it. You don't have to do anything. You know, every 3 months your total is growing. You got things growing. And here we go with the next guy, cigarettes, Altria Group. It's used MO stock. They're at 63, but see, their payout is $3.20 a year. And here we are at 5%. So once again, this is probably, and they've had 9 years of growth. Of course they are. And they're going to have the e-cigarettes. And again, they're going to join in the party as well. They have the funds. So if you want to get into that group of stocks, they're a little more. But again, 10 shares, $63. $630. And for each share, you get $3.20 a year. So this is going to wrap up the dividend talk and the economics of the situation for the day. And I highly recommend, it does not matter your age. Even if you're 60 years old, you're not dying anytime soon. You're going to live possibly another 20 years, the way our society is right now, because there's foods, there's drinks, there's a lot of stuff that can prolong your life. So you could live another 20 years. So even if you have a little money to invest here or there, you might as well do it, because Social Security may or may not be around. This may be your Social Security. So just think about that. Your pension funds, everything, 401ks, you don't know what's going to happen in the next economic downturn. So I've mentioned a stock before, which I should close with, AVNW, Aviat Networks. Once again, do not buy that stock at the moment. I've mentioned it only to keep your eye on it. It dropped from the time I mentioned it, 16 to 14, I believe. It's not something that you need to invest in. They do not issue dividends. It's more of a buy and hold and wait on the appreciated price going up, meaning if you buy it at 14, you're going to have to wait a while before it'll be 20. All right, it's not even going to be 20 probably anytime soon, because the stock market is actually going down. So that's why dividend stocks make much more sense. But just keep your eye on the AVNW on Robinhood. You can keep track of other stocks on that app. So any of these I mentioned, even if you don't buy them, you could just put them on there so you can always keep track and see what they're doing. But this is all about dividend day, ladies and gentlemen. So take advantage. Save money in one area. Use some of that money to invest in yourself. You're actually investing in yourself. You're investing in your family. So if something does happen to you, at least you can leave somebody something. All right. So thank you for watching. Keep your head up. Keep moving. And I'm out.